Hey everyone, welcome back to Finance Kida, your go-to channel for all things finance. Today we're diving into a super important topic that's gaining traction in the corporate world, cash management teams. If you're gearing up for interviews in this field, you're in for a treat. We've got a list of questions that are commonly asked during interviews for cash management roles, and I'm here to break them down for you. So, grab a snack, settle in, and let's get started. First up, let's tackle the big one. How accurate are our cash flow forecasts compared to actual cash flows? This question is crucial because it helps you assess how well your team can predict cash movements. When you're forecasting, you want to look at historical data, market trends, and any upcoming changes that might affect cash flow. To answer this, you might say something like, we regularly compare our forecasts to actual cash flows on a monthly basis, and we found that our accuracy has improved over time as we incorporate more data into our projections. Next, we move on to the key drivers of cash flow variability in our organization. This is where you get to show off your analytical skills. You could mention factors like seasonality, changes in sales patterns, or even unexpected expenses. A good answer might be the primary drivers of variability in our cash flow include fluctuations in sales volume, unexpected operational costs, and changes in payment terms with suppliers. Now let's talk about improving the accuracy of cash flow projections. This is a hot topic because the more accurate your forecasts, the better decisions you can make. You might suggest implementing more robust forecasting tools or enhancing collaboration between departments. A solid response could be, to improve accuracy, we regularly review our forecasting methods and incorporate feedback from sales and operations teams to ensure we're accounting for all variables. Moving on, how do we ensure that we have sufficient liquidity to meet our short-term obligations? Liquidity is like the lifeblood of your organization, so this question is vital. You'd want to highlight strategies like maintaining a cash reserve, using credit lines, or even analyzing cash conversion cycles. You might say, we maintain a liquidity buffer and regularly analyze our cash conversion cycle to ensure we can meet our short-term obligations without any hiccups. And what about strategies for managing excess cash or shortfalls? This is where you can show your strategic thinking. You could discuss investing excess cash in short-term securities or using it to pay down debt. For shortfalls, maybe you'd consider short-term borrowing or renegotiating payment terms with suppliers. A thoughtful answer could be, for excess cash, we typically invest in low-risk short-term securities, while for shortfalls, we have a line of credit that we can tap into as needed. Now let's get into optimizing cash reserves. This is all about making your cash work harder for you. You might suggest analyzing cash flow patterns to determine the optimal cash balance. A good response could be, we regularly analyze our cash flow patterns to determine the optimal cash reserves needed while ensuring we're not holding excessive amounts that could be better utilized elsewhere. Are there discrepancies between our bank statements and our internal records? This question is a classic. Discrepancies can happen for various reasons, and it's essential to have a process in place to identify and resolve them. You could say, yes, discrepancies can arise due to timing differences or errors in recording transactions. We have a reconciliation process in place to identify and resolve these issues promptly. Speaking of reconciliation, how do we efficiently reconcile large volumes of transactions? This is where your attention to detail shines. You might talk about using automated reconciliation tools or establishing a systematic approach to manage the process. A solid answer could be, we utilize automated reconciliation software that helps us efficiently match transactions, significantly reducing the time and effort involved. Now, what are the common causes of reconciliation differences? This question digs deeper into your understanding of the reconciliation process. You could mention timing differences, data entry errors, or even unrecorded transactions. A good response might be, common causes of reconciliation differences include timing differences in transaction recording, data entry errors, and occasionally unrecorded transactions. Let's shift gears a bit. How do we manage the centralization of cash from various accounts or subsidiaries? This is a big deal for MNCs, so showcasing your knowledge here is key. You might discuss cash pooling or centralized treasury management systems. A thoughtful answer could be, we manage cash centralization through a cash pooling system that allows us to consolidate cash from various accounts optimizing our liquidity position? And what about the benefits and risks associated with cash concentration? This question allows you to demonstrate your understanding of both sides of the coin. You could mention improved cash visibility as a benefit and potential risks like over-reliance on a single bank. A good response could be the benefits of cash concentration include improved cash visibility and more efficient cash management. But risks can include over-reliance on a single banking partner and potential liquidity issues. Now let's talk costs. How can we reduce the costs associated with managing multiple bank accounts? This is a practical question that many organizations face. You might suggest consolidating accounts or negotiating better terms with banks. A solid answer could be we can reduce costs by consolidating accounts where possible and negotiating better terms with our banking partners to minimize fees. Are our payment processes efficient and secure? This is crucial for any finance role. You'd want to highlight the importance of secure payment systems and efficient processes. A good response could be, yes, we've implemented secure payment systems and regularly review our processes to ensure they're efficient and minimize the risk of fraud. How do we manage and monitor outgoing payments to ensure timely and accurate execution? This question digs into your operational side. You might mention using automated systems for tracking payments. A thoughtful answer could be, we use an automated payment tracking system that alerts us to upcoming payments and ensures they're executed on time. What controls are in place to prevent fraud or errors in payments? This is a critical area for any finance team. You might discuss segregation of duties or regular audits. A good response could be, we have strong internal controls, including segregation of duties and regular audits, to prevent fraud and errors in our payment processes. Now let's shift gears again. How do we handle short-term and long-term investments? This is where you can showcase your investment acumen. You could discuss strategies for balancing risk and return. A solid answer might be, we assess our liquidity needs to determine the appropriate mix of short-term and long-term investments, ensuring we balance risk and return effectively. What trends or issues are emerging in our cash management practices? This question shows you're keeping up with the industry. You might discuss the impact of technology or regulatory changes. A good response could be, emerging trends include the increasing use of technology for cash management and the need to adapt to changing regulatory requirements. Are we adhering to internal policies and regulatory requirements related to cash management? This is a critical area for any finance professional. You could discuss regular compliance checks. A solid answer could be, yes, we conduct regular compliance checks to ensure we're adhering to internal policies and regulatory requirements in our cash management practices. What internal controls do we have in place to safeguard cash and prevent mismanagement? This question digs into your understanding of risk management. You might discuss audits, segregation of duties, and regular reviews. A thoughtful answer could be, we have robust internal controls, including regular audits, segregation of duties, and periodic reviews to safeguard cash and prevent mismanagement. How do we ensure compliance with international cash management standards? This is especially relevant for global organizations. You might mention training and regular audits. A solid response could be, we ensure compliance by providing regular training to our team and conducting audits to verify adherence to international cash management standards. What technology solutions are we using for cash management, and how effective are they? This question allows you to showcase your tech-savvy side. You could mention specific software or tools you use. A good response might be, we use a combination of cash management software and ERP systems, which have proven effective in improving our cash visibility and control. How can we leverage technology to improve cash visibility and control? This is a hot topic in finance. You might discuss real-time tracking and reporting tools. A thoughtful answer could be, leveraging technology like real-time tracking and reporting tools allows us to improve cash visibility and control, enabling quicker decision-making. Are there any integration issues between our cash management system and other financial systems? This question digs into the technical side. You could mention any challenges you faced and how you overcame them. A solid response might be, we've encountered integration issues in the past, but we've worked closely with IT to resolve them and ensure seamless communication between systems. How do we communicate cash management strategies and performance to stakeholders? This is all about effective communication. You might talk about regular updates and reports. A good response could be, we communicate our cash management strategies and performance through regular updates and detailed reports to keep stakeholders informed and engaged. Lastly, what feedback mechanisms are in place to address stakeholder concerns or requirements? This question shows the importance of collaboration. You could mention surveys or regular meetings. A thoughtful answer might be, we have feedback mechanisms in place, including surveys and regular meetings, to address stakeholder concerns and ensure we're meeting their requirements. And there you have it, a comprehensive list of interview questions and answers tailored for cash management roles. Remember, practice makes perfect, so don't forget to watch this video at least 2 or 3 times before your interview. And if you found this video helpful, please share it with your friends and colleagues. Also, check out our other technical interview videos on the channel for more insights. You can even increase the speed for a quick review. Thanks for tuning in to Finance Kida. Good luck with your interviews, and until next time, keep learning and growing in the world of finance.